Welcome back to my YouTube channel once again. So I will just hop straight into it. So as you can see, continuing from my last video, we were looking at the market on Sunday while it was closed, and we had area. It was, I believe it was 52.41, if I'm not mistaken. Basically, it was the old highs. It was the old highs of Friday and Tuesday, right? So it would have been 52.41, right? And we were looking at the buy side liquidity pool that was resting above that level, which would be this area I will be shading here now in the gray. Right, we were looking at that area because we knew above level 51.42 they were buy side liquidity sitting above there. So as we saw, price did trade up inside and it filled a 4-hour fair value gap. Now on the last video I highlighted the 15-minute and the 1 hour, but that entire price range, if we was on a 4-hour chart, it would have been the same 4-hour fair value gap. So I was saying that we were waiting for price to trade up into there at a particular time of day and the day of the week. When we already came to a conclusion that we bearish or bullish, as I stated in the video, with using the standard deviation strategy, it can be used with the institutional sponsorship with the flow of price, or it can be used as a counter trend type strategy. So I'll just give you a little brief price action, well, an update from Monday price. We saw that the area we were looking at, price did trade up into it and it rejected at the time of day we were looking at 10, but I didn't use this standard deviation strategy I didn't enter anything on price, because you can't use the standard deviation from Friday into Sunday during the 2 to 8 p.m. But I typically allow Monday price to trade, and then I see what the week would want to do after Monday price action, right? So as you can see, I'm currently in a trade here. Again, this is demo paper trading. Everything on this channel will be done in demo. Everything on this channel will be done with the aim to just give you something to look at when it comes to price and for you to see how strong the standard deviation strategy is. So if you can see, I already have a shaded area. I will actually remove the fair value gap that price rejected, so we can, because we already identified there as the area that price could got resistance from, and we could move this area 51.42, right? So this liquidity void area is shaded in gray. When the market opened on Sunday, it left a big void where, if you look on the higher time frame, it just have candle, the wicks and no bodies. So that would act as like a magnet to draw price too. So earlier this morning at I believe it was, like, what time I entered this trade? I think it was around 5:40 during the London kill zone, right? At the second standard deviation, you can see already it highlighted here, the second standard deviation. I entered long on pound. So what you want to do to get the standard deviation, the central bank leading range, from 2 p.m. to 8 p.m. you want to get the, well, why is, let's go to our chart and I encapsulate the entire area from the top of the wick, from the highest point between 2 and the lowest point wick included at 8. and you drag a fib. Now ICT Fibonacci calculations are different. So what I'll tell you to do is Google ICT Fibonacci settings, and you will get to set it just like him. I'm not sure if you could see it on my screen. Maybe I'll jumble up so you could Google it, and you will get the fib settings there. So you want to drag a fib from the highest point to the lowest point, and you would count 1 standard deviation right here, 1 standard deviation, 2 standard deviation, and 3 standard deviation, right? And what I do when I use standard deviation, I like to use anything between 1 to 2 standard deviation. It had some news drivers, and as I said in that previous video, news would just typically push price in the direction we were already anticipating, and typically the news does drive price down to about 3 standard deviation. So anything between 1 to 3 standard deviation is a good level to look at, to engage price. So you can see already in a trade here. Now at the time, I have a rule where how I manage my trades. Now typically when price reach at, whenever I enter a trade, and I have a rule where I always close at 1% a day, like 1% of my account, because I aim for 1% a day, right? No, I didn't get a chance to close out because I was explaining to you all everything in the video, but at one point I was at $234. Typically I close the majority of the trade at that position, at that amount, because it would have been my it would have been closed, if not at the threshold I look for. That is a very important rule. You must always close your trade at 1% of your account, right? As you get more familiar with trading, from, again, this is directed to new traders. Don't get too excited when you see the money going up, right? Don't ever say, okay, I want to make like 200 today or 300. No, always look at the money as a percent, and always have a daily percent threshold per day. That is what I would highly recommend, right? Reason being, I entered this trade at the second standard deviation. I saw that the liquidity void was being respected. The bodies wasn't trading through, just wicks. So that's why I saw this as a high probability entry with this strategy of standard deviation, right? I also give myself 2 entries per day. So if I'm wrong, I have a second entry. I just have to be patient and wait for the next setup, right? So that's just something I just want to put out there, right? So I just claim the screen because I already saw that, you know, we trade past 1 standard deviation. We're at the second standard deviation, so I could clear that off as well. I also did enter on euro, and one thing I noticed, when the central bank dealing range is typically small, like for example on euro was pretty small. It was like 12 pips, because ideally central bank dealing range should be about 30 pips and under, right? 20 pips is good, 30 pips good, but anything over 40 pips, when the central bank dealing range is over 40 pips, we don't use the central bank dealing, we don't use central bank dealing standard deviation strategy, right? I didn't backtest that when it's bigger than that to see any results. I don't know if in your studies, in your journal, you did it and saw that it's still you have a edge with it. If you do, leave a comment at the bottom, and I would definitely start looking at it as well. But as far as my studies, I have noticed that the central bank dealing range, when it's between 30 pips and under, it tends to be way more accurate, right? So we could see that even though price we in our overall sell model, we still have opportunities where we can capitalize with the central bank dealing range strategy. So I'll drop to a smaller time frame to get a little closer to the price to see what price is doing, right? So now we already anticipating price to come down. If you remember from my last video, I was looking at these lows here to get takeout, and if it continue going lower, my low hanging fruit was this low and these relative equal lows on the daily chart. And if price continue going down, I could have we would anticipate this swing low on the weekly chart to be the next draw, and then this volume imbalance on the weekly chart as well. So this drop in price action that we're seeing here is very much anticipated. So now we'll just wait and allow price to do its thing. So this is just part of the whole trading journey, where you have to be patient. You know, you have to trust your strategy, trust your understanding, and even if you don't get it, there are still other ways of entering trades, participating in the market, and you have to just submit to the journey of what trading is like. I know we do like seeing we'd like to be in Jordan, we do like seeing those things, but that's just part of it. You can't really get around that. So we just have to submit to the time and allow price to do its thing. So right now I'm just joining the distance that we went down so far. So we made it down to, I consider it's like 3.5 standard deviations down. Another thing I realized as well is I realized the dealing range would be the distance of the pip size would be the distance of the central bank dealing range. And this is something I've been experimenting, I just note in my journal, but in terms of stop loss, you can use the central bank dealing range pip range. You can use that as a stop loss if you want. So if you enter a trade, let's say you entered at the second standard deviation, the central bank dealing range was, say 16 pips, so you can put your stop loss at 16 pips. So if you entered at the second standard deviation right here, if you had a 16 pip stop loss right here, you can use a 16 pip stop loss. You can, but ideally I always use a 20 pip stop loss. I typically take 2 lots, and a 20 pip stop loss is pretty much within my risk management. You know, that part will be up to you. That part will be totally subjective with how much your lot size and your stop loss. That is up to you. But to me, with a $25,000 account, a 20 pip stop loss, which is $200, with a 40 pip target range, that is my risk to reward. Because I know at the same time, even though this strategy is to encapsulate the weekly range, I don't typically I use it intraday, meaning that yes, you want to give enough room for, you know, price to come down a little bit into where your stop loss is, not at your stop loss, but within that range where you entered, because there's the strength of the standard deviation setup strategy is to encapsulate the weekly range when you understand how to read the weekly profile and everything. So you had to give it some room, give your trade some room to breathe. So we could put 3.5. Price came down to about 3.5 standard deviation at New York kill zone. We have a strong rejection. We have a strong support area here. I want to see if this area whole price, this could be the New York run-on stops. So we have a swing low, a minor swing low was created here, and we run down. So this could be the New York stop hunt that typically happens. Right, so I just draw this line here, drop to a smaller time frame, 5-minute chart. So that trend line, that massive dip underneath the trend line, that could have been the New York stop, but we will see between not too sure if you're familiar with the OTE entry. That tends to happen between 8:30 to 11. Typically a retracement at New York. So we'll see. This is not part of this strategy, so that's why I don't use this. But one thing you will also realize is that there are a lot of other strategies within a strategy within a strategy. So it's like a trading strategy inception. You dig? So what I also notice is that when the central bank, when the standard deviation overlaps at 10 p.m. at the end of the New York hill zone, that time from 10 to 12, that's be London lunch. It has and ICT also dubbed it the New York session, or the morning session, silver bullet. When the standard deviation overlaps with that, there's also a very strong strategy too. But again, that is not exactly what we are looking at for today. Just all my entries is just strictly at the standard deviation. Only when the standard deviation lines up with the 10 o'clock hour, then we can look at, okay, we have some strength. So we've seen our price coming down into the liquidity void created when the market opened also this week for euro. Our stop is right underneath the liquidity void at the third standard deviation, underneath the standard deviation. The analysis I did for the euro chart was exactly the same way and same thing that I did on British pound. On the weekly chart, we were looking at a particular low on the weekly chart. We were looking at a very specific low. Wait, I don't catch myself. Forest skin. I made an error. We that 20 pip stop loss with 2 lots, sorry, is $400. 400. My bad, I said 200. When I'm in drawdown, what I do, I cut my lot size in half. So when I draw down, I would use one lot and 20 pips stop loss, then that will be 200. That's an error on my part. So as I said, the strategy, how I did my chart for euro would have been the exact same way I did it for British pound. The weekly sell side liquidity pool, I already had marked out that I was anticipating price to trade down to, and the low hanging fruit daily objective would have been this low here, and my bad, it's supposed to be sell side liquidity, right? These lows there, and for today the liquidity void. So I I'll go back to the British pound screen and just watch price. Welcome back. We had a minor inconvenience. Power went. You know, certain things you just can't get wrong. So picking up from where we left off, I'm not exactly sure where I was right before power went, but I'll continue from here. So we traded down to the third standard deviation with British pound, and I decided to enter at the second standard deviation. Right, I know you're seeing the big shaded area with 3.5. That is how far we went down. If we run the fib from the central bank dealing range, high to low, we came down just about a little more than 3.5, and just about 3. So we could safely say 3. We were within a couple of pips from 3. So we could say we traded down to 3 standard deviation. I'm gonna just edit this out. Yeah, we will put it at 3 standard deviations down, right? Sometimes you will get exactly to the pip. Sometimes it might go a little beyond. Sometimes it will go just under. But the point is, we did trade it down to the standard deviation. This is 2 right in here. So we could safely say there's 3 standard deviation. We would send about, we off by 3.5 pips, right? So also I did enter with British pound and euro. We can see that the entry at euro, we right now trading back up. Euro went down to about 3 standard deviation. You see, exactly to the pip. Euro went 3 standard deviation to the pip down, and we had our entry during the London. It went down to the 2 standard deviation during the New York hill zone, and then we entered. We could have also entered after the news driver that drove prices up for British pound, which would have been this high here that I'll be shading here in the gray. We could have entered at that high for a short, but it traded up just under 1 standard deviation with the news, and I was waiting to see if it wanted to go any higher, but it didn't go any higher, and I also dropped to sleep. That will happen a lot. I end up dropping to sleep, so I knew that my entry at the second standard deviation would have also been a high probability entry. Anything between 1 and 2 standard deviation would have been a high probability entry, especially after I saw the liquidity void shaded in gray. That none of the bodies, if you notice, none of the bodies really traded through on the 1 hour chart. Right, if you drop to a 1 hour chart, the bodies was respecting the liquidity void, right? And I didn't mind the wicks going through. So if I drop to a 5-minute time frame, you would see the other trend line. I was confident that that rundown underneath that trend line was just run on stops. And actually, right after I drew the trend line is when the power went. I wanted to illustrate how I manage my trade when it's going against me. So, in other words, had I saw any further price going underneath these lows here that I'll be highlighting, if I saw price traded underneath that low, I would just taking it a little bit, then I would have closed about half of my trade. I would have closed half off, and just so if I was wrong, I would have been able to manage the trade. That's how I typically manage trades. You know, I have an area of interest, and if I see the price keep on going beyond that, then I'll close off half. And then if I see price stop and then start going in my direction, I would put back on my trade, because the trade idea that I have would still be in effect. That's how I typically do it, right? So I also said that I always close off a portion of my trade whenever I get to 1% of my account. So I have a $25,000 account. You could see up in the corner here at 25,000. I'm up $560. So what I'll do is move my stop loss just under price. So it doesn't have to get to my limit order, my take profit, for it to be a successful trade, because I know how I view the market is not about how much money I make every day, it's how much money I get to keep. So I typically move my stop losses up into profits, and that way I lock in my position. And yeah, that's pretty much it with how I typically trade. I purposely resetted my account to illustrate how I would be demonstrating my trades for the next coming months and next coming videos for you all. The strategy I implement, what I use, and again, it's to encapsulate the weekly range, but I use it as an intraday strategy. So if I just switch out to see how much money it would be for the day, I'll have 190 locked in and 180. So for the day, if we add the two, um 180 plus 190, I would have 370 locked in. All right, 370 locked in. So that's typically what I do. And that's about it for this video. It's not really that much into it. It's more of me explaining and demonstrating. So the videos may be a little longer than some, maybe a little shorter, but typically it will just be me explaining how I view the charts, explaining how I manage trades and everything. The first couple of videos may be a little lengthy because it have some explaining and so forth and so forth, but for the most part, I would try to work on the length of them so they could be shorter. And just for the sake of everything, I would move the break even and I would just close off some of the trade. So I would allow the trade, I will hold the trade for longer and see if it will trade up higher to the limit order. So I'll just close off some 2 lots. So I'll close off, I would lock in about half of it. Now I'll close off less than half, so I'll close up about half of this would be 1 lot. I'll close off about 80 on British pound, and I will close off the same on euro. And I'll move my stop loss to break even. So that way we would not lose anything in the trades. Yeah, so we wouldn't lose anything in the trade, and we will still give our trade time to grow. So that'll be it, and I will see you all in the next video.